to a smart investor channel. So today I'll be talking about one of my favorite stocks that we have all grown with, that is the Disney company. So I'll be doing an overview of the company's profile, numbers, tech analysis, and my play strategy for this stock. Now, for those new to the channel, I'm a corporate professional stock investor, real estate investor, and a passionate gamer. Oh yeah, play COD, Battlezone, and Counter-Strike. So I also do now some YouTube videos to share my knowledge and personal thoughts on investments, but most importantly, to share my passion with you guys, and I love it. So, that being said, please demolish that like button, and if you like the content, please subscribe and hit that bell notification so you don't miss any of my future videos. So, now let's get down to it. All right, so about the company's profiles. So I'm pretty sure that all of you guys already know about Disney, right? The theme parks, the Disney Plus that actually got created last year, but it's so much more than that. And that's why I wanted to introduce you first to this profile right here, which pretty much summers pretty damn good all the companies are part of, right? So here we have on the left side Marvel Entertainment, right? So it includes all the brands as well as their studios. They have on the right hand side the Fox Entertainment Group, right? So this has a lot of channels here. Think about all the channels like Hulu, which has a lot of revenues incoming for them, National Geographic. So really interesting here. The whole Walt Disney, of course, studios. They have the Disney Music Group as well, the corporate side of it, all the theme parks, which is humongous. Disney Theatrical Group, the ABC Group, which includes History Channel, Lifetime, Disney Plus. So that's really cool. And you have here, well, a bunch of other ones, ESPN and other ones that I'll skip. Two things really interesting for me, okay? A lot of you guys already know DraftKings, right? You guys are invested in this probably. Well, they hold 7% of shares of DraftKings. That's amazing. I didn't know that. I don't know if you did. Let me know in the comments if you actually did. I'd be curious to know more about this. And I see GoPros here, which actually they did an amazing last earnings quarter. And I think they're going to keep growing as COVID-19 remains and post as well to that, right? So that their growth was amazing. So I won't talk about GoPro, but that's a company that I like as well. I'll let you guys look more at the companies here, but definitely wanted to show you an overall view of what they were about. So now let's move on to the numbers. All right, guys, so now let's take a look at their last earnings, which was Q4 2020, and let's see more about their vision as well as their financials. All right, so something important to know about Disney is that despite COVID-19 and their closure of their parks, they have been doing amazing in terms of their growth, but as well as their stock price, right? So if you look at the charts, we'll look at them shortly. They've been doing amazing. They've been balancing well with the online services as well as their broadcasting and entertainment, right? So think about the amazing Mandalorian. I mean, this has been doing really great. I'll show you the numbers. So listen, in terms of Disney and their vision, all right, so Disney Plus got created a year ago, so it's not been long, and they're planning to expand in 20 other new countries worldwide, which includes Latin America, including Brazil, Mexico, Chile, Argentina, and followed by other overseas markets. So this is really great to see expansion like this. On top of that, well, they acquired a total of 73 million paid subscribers, which exceeded their expectations within the first year. So that's really amazing to see. We all know that, like Netflix and all that, what really counts here, guys, it's the number of subscriptions, right? That they need to still increase and see growth. If we see a decline or retention or average cost for each that consumes, that's not a good sign, right? So this is great to see for Disney Plus. And during the investor day, so this is a day to keep in, guys. Again, take your pencil and notepads, guys. December 10th. It's a day presentation for the investors. They will provide more guidelines for their global subscription numbers along with other numbers upcoming for Q1 2021. So looking forward for that date. Now, for those who are great fans of The Mandalorian and Star Wars, well, you all know about this series. It started. It's just amazing. I'm watching this every Friday, like a couch potato for sure. And there's apparently Soul, which I'm less familiar with, but apparently they're going to start as well on Christmas, so that's looking great. ABC became number one, so that's amazing to see as well, including Dancing with the Stars and The Corner. So I'm sure most of you guys, see either of these three channels and shows. So, definitely they got great things going on here. All right, so now let's look at their financials. Their diluted EPS for the quarter was a loss of 20 cents compared to an income of $1.07 to prior quarter last year. And APS decreased, unfortunately, from $5.76 to $2.02. The main reason, obviously, well, it's not a secret, it's COVID-19, right? And the most impacted sectors were the parks, of course, the experiences, and the products. In terms of revenue, so this last quarter they did $14.7 billion dollars compared to last year's same quarter, $19.1 billion dollars. So that's a decrease of 23%. And year to date, there's a change of minus 6%. So definitely, as for the reasons we've just mentioned, there was definitely an impact here. But nonetheless, it could have been a lot worse if they were not diversified into other products and services. In terms of free cash flow, I mean, these guys got deep pockets. They're pretty positive, as you can see here. It's pretty good, $938 million, and they definitely, close to $1 billion here, and they have major assets. So I'm very, very secured by this, and I'm confident about Walt Disney. All right, so the impacts, as you know, were the parks, experiences, and product segments. Now, how much was that? $2.4 billion and $6.9 billion. So that's humongous, right? No doubt that they could have done way better if COVID-19 wasn't there. But let's see more concretely. Their revenues decreased, as you know, from 19 billions to 14 billions, but now in total segments, so that's the media park studio with direct to consumer, that was a decrease from 3.4 billion to 600 million in income. So that's huge, guys. That's a 82% drop and 45% drop year to date compared to last year's same period. So there's no doubt here, guys, that definitely Walt Disney would have done way better, tremendously way better, if they had not gotten the closure of their parks, right? So this shows you here how much potential they have. Once everything recovers, they will just skyrocket, right? This is going to be a long-term shot, guys. This is definitely a stock that I'm keeping for many, many years to come. All right, guys, so I just quickly wanted to show you that Walt Disney was owner of 18.2 million shares of DraftKings, represents approximately 6% of the total ownings of DraftKings. So this is huge, and it's a good information to take in note as a shareholder. I think these kind of companies that own other companies is always a key information to hold. All right, guys, so now let's go through my technical analysis of the stock as well as my playbook for this. So they closed the market on Friday at $154. That's an upside of 0.60%. After hours, they were slightly, barely down. In terms of the analysts, they have an average price target on this of $152, and the highest estimate is at $175. The PA ratio is 76.24. All right, now let's take a look at their chart. So 1 year ago, they were at more or less $147, and then when COVID-19 hit, it went all the way down to $80. Since then, they've been recovering pretty nicely with a few dips, as you can see, and today they've reached out at $154. I personally got in, I was lucky at $128 level, and since then it's been doing pretty well, so I like that. By the way, this is healthy to see a pull down and then up, pull down and up, as opposed to a straight line green up and then significant huge drop, right? So this is a great stock to see here growth. And why I'm showing you Disney, by the way, is because I think we should always be diversified. In my portfolio, I have 80% of my money in stable stocks, seeing good growth, but that they're actually doing great for the long term. So I'm going to be in Walt Disney for many years. 20% of my money, more or less, or 15%, I played in the short term. So more like day trading or shortening stocks. So you should keep that in mind. This stock is definitely for the long term, as far as I'm concerned. Now let's look at the buying zones. If we look at what the 1 month chart, so they're currently consolidating with low volumes. There's two options, right? I hope it's going to consolidate and go up. But if they don't, the support levels you should see it. There's three of them. Okay. The first one is right here, more or less $148.49. The next one is at $146 level. The next support level at $141, and the last one at $135. Definitely, I will. This is the first buy zone for me at small amounts, as I'm already an investor. The second buy zone would be here. So anywhere between 140 and 144 would definitely be a good buy zone. More money here, but definitely a bigger amount of money at $135. I don't think it's going to reach out again that amount, but if it does, definitely consider buying good amounts there. But I'm not a financial advisor. I just want to remind you, so you should do your own research, of course, but I'm expressing here what I'm personally going to do. So here are my thoughts for this one. Like I said, it's important to have a diversified portfolio and to have stability as well. You don't want to be suddenly only in the EV sector, and then when it drops like it just did, you're in the red, but big time, right? So do your research, make sure that you diversify, and you'll be okay. And further than this, well, listen, I want to hear you out. Are you here for the long term? Do you like this stock? Do you like what I presented to you? And also, well, if you like the content, please smash that like button as it really helps the channel. This takes a lot of time to do, so it would support a lot. And subscribe along with the bell notification so you don't miss out on any of my future videos. And look, I have a lot of things coming up that are going to be great. So stay tuned. Have a great weekend. I'll now see you next time. Peace out.